Hi, I'm Matt Stoller, author of monopoly-focused newsletter Big and an antitrust policy analyst. I have a great segment for you today on this big breakdown. It's about how Wall Street and passwords intersect. Now, passwords are an inescapable part of our lives. I have a lot of passwords, and so do you. I actually have a list, and I tried to count the number I have, and I counted 19, just for the sites and apps that start with the letter A. Now, of course, I can't remember them all because I try to have different passwords for different sites. Now, a cottage industry of solutions has come and gone in waves, all trying to help us safely create, store, and use dozens of different passwords, while only having to remember one to unlock them all. And in the past few years, a handful of startups competed to be the leader in cross-platform password protection and storage. A very popular password management program is called LastPass. In 2019, the software provider that owns LastPass, is called LogMeIn, was purchased, however, by two private equity firms, Francisco Partners and Evergreen Coast Capital Corporation. Now, 2 weeks after the purchase, LastPass raised prices on those who are basically locked into its system. So who are Elliott Management and Francisco Partners? They are what are known as private equity firms, which are giant pools of money run by financiers who buy stakes in private companies in hopes they can sell those stakes for a profit later on. That seems fine. It's just investment. But for a variety of legal reasons, the financiers behind private equity buy companies without putting themselves at risk. If anything goes wrong, the company might go bankrupt or lose money, but the financiers themselves don't. They are protected by corporate law. And that creates an incentive for destructive behavior, because financiers can make a lot of money if things go well, but can't really lose that much if things go badly. They're really losing other people's money, and they're blocked from even losing too much of that. So private equity firms are very short-term oriented and tend to make their money by buying companies, then raising prices on customers, cutting workers, or undermining the quality of the product. And this might long-term hurt the enterprise value of the company. But in the short term, it increases the amount of cash it generates, and so the amount that they could flip that company for. In this case, Elliott Management and Francisco Partners made LastPass unusable unless customers paid. And this was active, making it slightly less annoying to pay than to move all your passwords to a different firm's products. Okay, so then late last year, so that's one thing, right? That's pretty annoying, but it kind of happens. Here's the real problem. Late last year, information began to trickle out regarding new management, or lack thereof, at LastPass. Apparently, hackers had stolen encrypted password vaults from the company, and this hack was all over the internet. Here's what one security pundit said about the breach, but there were many of them who were talking like this.
LastPass has effectively suffered the worst breach possible for a password management company. Like it could get a little bit worse if they were truly negligent, like willfully malicious. But in terms of not wanting it to happen, it's pretty much as bad as it can get.
LastPass employees fell victim to a phishing attack in which hackers successfully obtained proprietary information. Now, phishing, which is spelled with a PH, is when a hacker sends an email or message purporting to be from a reputable source in order to induce someone to reveal personal information, to click on a link, and then often get access to an entire system. So they did this to LastPass employees, and it worked. Now, months later, the hackers then used this knowledge to launch an even more sophisticated phishing attack, which subsequently led to a data breach, during which they took almost all LastPass user data, though much of it is encrypted. Or so it would seem. LastPass management is under no requirement to tell us exactly what happened. And with the data hackers phished from LastPass, scammers are going to try and trick users into giving them their passwords for years to come. Now, LastPass itself recommended some extreme measures, including, in some cases, changing every password you stored in LastPass. Kind of defeats the whole point of having a password manager. Okay, so the situation can look like a simple hack, something that happens all the time. But let's not lose sight of the root cause here, which is not hackers or poor IT practices, but a business model focused purely on financial extraction. LastPass is one of dozens of examples, since poor quality is common in private equity-owned software, which means cybersecurity vulnerabilities quickly follow. For instance, the New York subway was hacked through commercial software it used called Pulse Connect Secure. This software was owned by Ivanti, a software roll-up owned by private equity firm Cheer Lake Capital Group and TA Associates. A few years ago, thousands of companies and government agencies were hacked through the software of a private equity-owned company called SolarWinds, which was controlled by the private equity giant Thoma Bravo Partners. And now there's LastPass. Now, every one of these private equity transactions makes the world ever so slightly worse. And at this point, it's time to recognize that ownership and management of software firms by private equity itself is a security risk. We can't eliminate hackers trying to do bad things, trying to steal passwords, trying to steal identities and money. But we can change the law to stop Wall Street from burning down the companies who build products designed to protect us. Thanks for watching this big breakdown on the Breaking Points channel. If you'd like to know more about big business and how our economy really works, you could sign up below for my Market Power Focused newsletter, Big, in the description. Thanks and have a good one.
Hey guys, ready or not, 2024 is fully upon us now, and Saagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.